Okay, now that rate hike, should we be expecting more? Is that just a front loading of the 100 beeps that the BSP has touted? Meaning, should we be expecting more action, or does that signal as well of an acknowledgement that inflation environment is higher compared to what they had originally expected?
Well, that's what happened yesterday. Was actually a shift to a forceful tone. They're trying to ram down the message, that they're getting serious about inflation control. So we're expecting the Monetary Board to deliver probably another 50 basis point hike this August, with scope for another 25 basis point hike probably around September, and then they'll hold for November and December. Inflation upsides for the remainder of the year and FX depreciated levels on the back of deeper current account deficits still warrant further policy rate support. So likely that's where the pace will be.
Okay. Sir, then how soon can we feel at least the impact of these rate hikes?
Well,
especially when it comes to tempering inflation.
There's value in signaling for the rate hike. So, but actions are actually well, like yesterday, there was a higher premium to that. So there were positive reactions as regards to one is FX, and as well as the GS market. So probably, any policy rate action takes around 6 to 8 months for it to fully permeate into the financial system. But like I said, the value is in the consistency in terms of signaling that the monetary authorities have our back in terms of trying to control inflationary tendencies.
Sir, the good gov has said that we do not need to keep in step with the Fed. But of course, this action came directly after the inflation print in the US and also other central banks. You've got, Singapore in particular earlier before the Philippines moved. To what extent is this action done to narrow the spread with the Fed? And to what extent is it, as you mentioned, domestically to arrest inflationary expectations?
Well, that's still going to depend on where the real interest rates will be. So that's inflation minus just inflation and the policy rate. So if we are probably near zero, it's not net. I think what they really mean is that by not being in lockstep with them is the differential between inflation rate and the policy rate. So if we're near that, we're near zero, or slightly above positive, that could mean that there's scope for the central bank, at least our own central bank, to slam on the brakes a bit, and begin supporting policy anew, growth anew, after that aggressive rate hike.
Compared to other banks, central banks, you've got the Bank of Canada raising 100 bips, and then you've got Singapore, Chile, New Zealand, others as well. Are we actually aggressive compared to the rate hike cycles that we were seeing globally?
Well, compared to them, those countries you mentioned, they're mostly developed economies already. So the move there, or the effects of the moves there might be different or misconstrued differently from, let's say, emerging economies like the Philippines. So I think relative to that, we're getting there. We may not be as aggressive yet, but like I said, if we do 50 bips on August, that's already aggressive, or a more aggressive move by our own central bank. So that will still likely to continue to weigh on the markets in the near term, until such time that consistency in terms of aggressiveness is conveyed by the monetary authorities.